Hello, everyone. Welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. You can post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @DougPless. For those of you who've seen my webinars before, please bear with me. I need to go through this introduction. I want to make sure everyone who is watching this understands my approach to trading. So please bear with me. I want to get to the live market as much as you do. All right, here are the key tenets to my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures. That certainly applies to large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the S futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of the trades and hedge their delta exposure with the S futures. And for the NASDAQ 100, NDX is the underlying index, QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of the trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading. The first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. Here's my agenda for today, Monday, March 9th. First of all, I want to go over news items, economic data, and events and earnings coming up for this week. Then I'll go through my positional analysis. Then I'll review some setups earlier today. Then I'll take a look at the live market. And when I get to live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's get started with news items. So first of all, if you're watching this after the live presentation, or if you're watching the recording, just want to remind everyone that the United States has shifted over to daylight saving time. So I am presenting now at 1:30 p.m. Eastern time, and that is Eastern Daylight Time. All right, so hope everyone gets that straight for the rest of the week. All right, let's move on. Let's take a look at some news items now. So upcoming events. So I'm taking a look at the Spotgamma dashboard home screen, looking at the event calendar. So coming up this week, there was no data today, no economic data. Coming out tomorrow, 10 a.m., existing home sales. Not sure how much that's going to be a market mover. And then we'll take a look at earnings in just a minute. All right, so market mover coming up on Wednesday, a potential market mover. CPI data comes out at 8:30 a.m. Eastern Time. Again, Eastern Daylight Time. So that's one piece of inflation data. Then on Thursday, building permits, housing starts, jobless claims come out at 8:30 a.m. Eastern Time. Then big data releases on Friday, 8:30 a.m. Eastern Daylight Time. PCE, durable goods, GDP, that's all at 8:30. So that's the big block of data, economic data coming out on Friday morning. And then 10 a.m. Michigan consumer sentiment. All right, let's take a quick look at the earnings chart. So one stock that may be of interest is Oracle, reports earnings after the close tomorrow, and the expected move is plus or minus 10.7%. All right, so that is the data. All right, so let's move on to positional analysis now. I'm going to start with the S&P 500. This is the S futures and Bookmap. And let's zoom out quickly so we can go to the open yesterday. So oil spiked yesterday evening. ES dropped sharply lower, found support right around the SPY 657 level, and began to rally after that. Pull back at the cash open. We'll focus on this in just a couple of minutes. And that was around the SPY 663 level. And then ES rallied up to, and it looks like it's just turned lower a few minutes ago, up to the SPY 672 level. Which is right here. All right, let's zoom in just a little bit here. All right, and this rally that began yesterday evening, S&P 500 has moved above the 6,600 level. That's SPX 6,600, the SPY 660 put wall. Also regained the SPX 6,700 put wall and is now trading right around that level. All right, before I spend more time on this chart, let's step back. Let's take a look at our higher time frame. Let's go to the SPX, the underlying index. Take a look at a one-day chart and thinkorswim. So the rally that began last year, April last year, ended up in a consolidation this year for a while, a couple of months, between 6,800 and 7,000, and that has broken down now, with SPX making a series of higher lows, lower highs and lower lows. All right, so let's take a look at that more closely with a shorter time frame. Let's go to a 30-day 1-hour chart. So I have a linear regression channel shown on this chart. Oops. That's right here. Downtrending, showing SPX, lower lows, lower highs. Last week, SPX broke down below the 6,800 level and found support right around 6710 or so. And today gapped down below the 6,700 level. That's the put wall. Down almost to the SPX, lower daily expected move. rallied up above the put wall, and that looks like it's now trading right around that level. All right, let's take a look at the levels on this chart. I'm going to start with the expected moves. Hey, Stephen, welcome. Glad you're here. Are the expected moves. There's purple lines showing the lower and upper weekly expected move. This is based on the options market, based on the closing price for SPX. From last Friday, those levels remain in place for the entire week. Dash blue lines are showing the lower and upper daily expected move. This is also based on the options market, based on the closing price for SPX, again from last Friday. Those levels change every day, and I do post the expected moves every day the day before. So they're based on the closing prices. So I post the expected moves every day the day before for SPX, ES, and NQ. And note that lower daily expected move was definitely in play for today. All right, those are the expected moves, again based on the options market. Now let's take a look at the Spotgamma levels. These are based on gamma-weighted open interest. They're provided to Spotgamma subscribers. I'm going to point out the key daily levels. First of all, the put wall at 6,700. That's a strike that's key for today. That's a strike where large net negative gamma can be expected to act as support. The next level up is the volatility trigger at 6830. Then a Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. Note that is based on Spotgamma's older total open interest model. We'll take a look at a view of gamma based on their newer synthetic open interest model in just a couple of minutes. And it is quite negative across the board. All right, the volatility trigger did shift lower from Friday, down to 6830 now. All right, so the next level up is the absolute gamma strike. That's at 7,000. That's a strike where largest absolute positive and negative gamma. So that's where most of the gamma-weighted open interest is concentrated. And then the call wall remains at 7,100. That's a strike where large net positive gamma that can be expected to act as resistance. And of course, the absolute gamma strike and call wall are definitely not in play for today. And the put wall definitely is in play. All right, shifts in levels again. The volatility trigger shifted lower. All right, let's wrap up our view of SPX with a 1-minute chart. So looking at price action last Thursday, this zone here, and that is between 67.70 and 75, acted as support. Then resistance on Friday. Then SPX gapped down today below the put wall. Found support just above the lower daily expected move. Traded up to and above the put wall and is now trading down below that level. So we'll take a look at that in just a minute. All right, so the only Spotgamma level in play for SPX today is the 6,700 put wall. All right, let's take a quick look at SPY, the other underlying index component. Go back to SPY. Let's zoom in on this just a bit. Dark shaded portion shows regular trading hours. Overnight, SPY found support right around the 657 level, recovered its put wall, at 660. Traded up to and found resistance at this combo 1 level. And that is at 668.37. And then later on in the day found support at that level, resistance at the 670 level. Now it looks like it's found support closer to 668, but is moving higher. Zoom in one more time. Key levels in play right now. Combo 1 level, resistance, support, and now price is chopping up and down around that level. All right, that's SPY. All right, so Bookmap, let's zoom in. There's the resistance before the cash open at that combo level. Support right around SPY 663. That's right around 10 a.m. Breakout above that combo level. Support, resistance at the 672 level. And it looks like there are some angry sellers in now, shown by the large magenta volume dots. Cumulative volume delta rolling over. We'll talk about setups in just a couple of minutes. All right, so those are levels in play. A lot of round numbers in play, not a lot of Spotgamma levels in play, other than that combo 1 level. All right, shifts in levels for SPY. Volatility trigger put wall, both shifted lower. Absolute gamma strike did shift higher. All right, let's take a look at NASDAQ. All right, NASDAQ price action starting 6 p.m. Eastern Time yesterday. Similar chart to the S&P 500. Found support sometime before 11 p.m. Rallied. And it looks like NASDAQ found resistance. Kind of in the zone here that's right above the NDX 24,650 volatility trigger. And up to NQ 24,750. And then the QQQ 602 level just above that. All right, by the way, I forgot to mention, on the S&P 500, there's a difference in price between ES and SPX. And today it is somewhere between 5 and 6. Looks like maybe a little bit closer to 5 now. I changed to 6 and it's back at 5. So let me change that back. It may be 5.5 is a little bit closer. I'll use 5. All right, so I'm showing SPX 6700. That should be right around ES 6705. That's at offset. And note, this is the last week of trading the March contract. And it does expire a week from Friday, but I'll start trading the June contract next Monday. So this is the last full week of trading the March contract. And note that offset will increase pretty substantially next Monday when I roll over to the June contract. And most people do roll over on Monday, the last week before expiration. All right, back to NASDAQ. All right, so let's step back. I know there are a lot of lines on this chart, a lot of movement. So let's take a look at the underlying index charts. Let's start with QQQ. Zoom in here. All right, QQQ. Overnight low. Right around 584. And a little bit of chop around the 590 combo 3 level. All right, no clear support and resistance. And note, at the open, QQQ was trading well below its 600 put wall absolute gamma strike. Did trade up above that level, now trading down below. And did find some resistance at this 594.91 combo level. All right, so that's NASDAQ. I'm sorry, we need to look at NDX. So let's go to NDX. All right, most of the spot gamma levels for NDX are up above. Volatility trigger at 24,650. That was in play. It looks like now NDX is trading around its volatility trigger. And that is at NDX volatility trigger or zero gamma level, 24,580. All right, that's NASDAQ. We'll talk about setups in just a couple of minutes. All right, let's zoom in on this. Yeah, I should have turned off the round number lines. There's too many lines on this chart. Such a wide range of movement. And Nicholas, welcome. Glad you're here. I believe you've asked this question before, and I've answered you in quite some detail. All right, that's the indexes. Anybody have any questions about the indexes? All right, shifting levels for NASDAQ, volatility triggers shifted lower for NDX and QQQ. All right, let's wrap up our position analysis by taking a look at gamma. So let's take a look at the trace gamma heat map. Let's zoom just a bit. All right, so this is showing market maker's gamma position. Red shading shows negative gamma. And remember, negative gamma, we're looking for higher volatility. We're looking for more trending market, rapid price action. And blue shading, there is a little bit up around the hedge wall, the volatility trigger, indicates positive gamma. And positive gamma, we're looking for lower volatility with market makers trading against price. All right, well, I want to step back in time. This is at the cash open at 9:30. So what we're looking at is the GEX bars over on the left here. This is market maker's gamma position. Again, blue shading, positive gamma, red shading, negative gamma. All right, let's step forward 10 minutes. All right, now we see some large gamma bars appearing here. First of all, this is the short put spread of an iron condor, and that is at 66.15, 66.20, 15.20. Then the short calls. Let's step through time, and we'll see that a little bit there. So that's the short put spread, and there's the call spread right here at 67, 55, 60. All right, let's step through time. This updates every 10 minutes. So you can see as price is rising, the gamma and the put spread is diminishing. Gamma is greatest at the money, at expiration. So as time passes and price moves away from that put spread, gamma at that level is diminishing and increasing at the call spread. And now as price moves back down, gamma is diminishing at both strikes. So it looks like so far that is a very profitable trade. Some trader or traders taking advantage of the high volatility, selling that iron condor pretty far out of the money, and it looks like it's a profitable trade. All right, so far, SPX remains in negative gamma, and net for the day, Hero is showing traders taking positive delta options positions. So let's see what they're doing. So the levels that we took a look at, those are based on open interest. They're updated once a day. Then this information, the gamma information, is updated every 10 minutes. Now let's move on to real time. So let's take a look and see what options traders have been doing in the S&P 500 in real time. So this is the Hero signal. This is available to Spotgamma subscribers. This is the Hero signal for the S&P 500 index components. And we've already taken a look at the two of those. That is SPY and SPX. This also includes options trades and market maker hedging activity for ES and XSP. So this is showing options trades, market maker hedging activity for SPX, SPY, ES, and XSP. The white line is price for SPX. The purple line is the Hero signal. A rising Hero signal indicates traders are taking positive delta options positions. They're buying calls and or selling puts. A falling Hero signal indicates traders are taking negative delta options positions. They're buying puts and or selling calls. All right, I'm going to separate out puts and calls now. I'm going to have to jump. Remember, the S&P 500, the market opened lower in a very high volatility environment. So let's zoom in on this now. So the rising blue line indicates traders are selling puts. When traders sell puts, market makers buy the puts, they have to buy futures to hedge their delta exposure. One other thing to keep in mind, let's take a look at wrong chart. Let's take a look at VIX. All right, let's zoom in on this. So since about since about 10:15. That's when the market turned higher. VIX has been dropping pretty substantially, from right around 32 down to just above right around 26.5. Pretty substantial drop in VIX. So that is definitely a tailwind for equities. So what's going on? Traders coming into this morning, long puts. Market makers are short puts. And then as price increases, volatility drops. Market makers can buy back market makers are also short futures to hedge their delta exposure. So traders long puts, market makers short puts, and they are short futures to hedge their delta exposure. And as price increases, volatility drops, market makers can buy back their short hedges. And that is a put Vanna rally, put Vanna tailwind. Volatility dropping, those puts start to lose value, and market makers can buy back their short hedges. All right, so traders taking advantage of the high volatility this morning. Selling puts. And then right around 9:55, they started buying calls. And S&P 500 ES made one more low. Traders resumed buying calls, selling puts. Price moved higher. And really, traders continued to buy calls and sell puts up until about 12:45. And that's when the market rolled over. And that was just above the Spotgamma implied one-day move high, which is based on the opening price for SPX. All right, let's take a look at the S&P 500 equities. Pretty similar chart showing traders selling puts, taking advantage of the high volatility that began just after the cash open that started buying calls. S&P 500 made one more low and then began to move higher until about 12:45. All right, so let's take a look at Bookmap now. So I want to zoom in on this. So I'm watching Hero on one chart, Bookmap on another chart. And I want to focus on this area right here. All right, so first of all, what I was seeing is this double bottom pattern. ES made a slightly lower low, didn't begin to rally, so double bottom pattern, at least the way I understand it. All right, so let's focus on this area. So we can see the volume dots of Bookmap show market buy minus sell. Magenta dots indicate more sellers than buyers. Green volume dots indicate more buyers than sellers. So we can see some aggressive buyers starting to come in right here. Large green volume dot. Some support. Heat map showing a history of limit orders in the order book. So we can see some buy orders. That's right around 66.40. Yeah, 66.40. Looks like they were not filled. Limit buy orders, 66.40. Aggressive buyers starting to come in. Large green volume dot. Notice on this last move down, large traders were fading that move. They were buying with iceberg orders. They started selling. So that was kind of an iceberg kickoff there. Large traders buying weakness. With iceberg orders, they use to hide their size. They take the foot off the gas. Then aggressive buyers come in, shown by the cumulative volume delta there, the dark blue line. So we can see aggressive buyers starting to come in. We know traders are already selling puts. They start buying calls and price moves higher. A couple of pullback entries. Down to ES 6650, SPX 6650. And the rally continues up until about 1245. Looks like finally ending up finding resistance at 6740. So 6640 to 6740. Liquidity marking both the high and the low. All right, that's the S&P 500. Looks like finding support at that combo level. Key combo level today, 668.37. All right, that's the S&P 500. Any questions? So it looks like also buy stop orders continue to drive higher, shown by the rising yellow line. All right, any question about the S&P 500? So if you were patient this morning, and it took a lot of patience to wait for this setup, right around 10:15, then that was a very good trade. Almost 100 points in the S&P 500. Terzog, welcome. Glad you're here. All right, so Terzog is asking about the roll. So you roll over to the next contract next week. Yes. Does that mean you roll over on the second half of the month, of that contract's month each time? Just trying to understand. All right, so the equity futures are in monthly, quarterly expirations. So for the ES, NQ, the expirations every year are March, June, September, and December. So the March expiration is coming up next week. That's Friday next week. So I always roll over the Monday of the expiration week, and that would be to the next quarter. So again, equity futures roll over quarterly, March, June, September, and December. All right, let's take a look at NASDAQ. Similar pattern in the double bottom, except NASDAQ did not make a lower low. Cumulative volume, delta rising. Also buy stop orders helping to fuel the move higher. And a few iceberg orders. Let's see what options traders are doing in NASDAQ. So just like the S&P 500, there are two signals that we can take a look at. This is the NASDAQ index signal showing options trades and market maker hedging activity. For the NASDAQ index components, that's QQQ and NDX. We've already taken a look at those. So this is showing, again, traders taking advantage of high volatility, selling puts, then also started buying calls. Blue line shows puts, orange line shows calls, and peaking just after 1245. And just like the S&P 500, that has two signals that we can take a look at. NASDAQ also has two. This is the MAG 7 signal, showing options trades and market maker hedging activity for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla. Again, traders taking advantage of the high volatility, selling puts, starting just a few minutes after the open, came in and started buying calls. Resumed buying calls right around 10:15. That's when the index took off. By the way, this chart shows price for NDX. This chart shows price for QQQ. And again, the call buyers and put sellers took the foot off the gas right around 12:45. That's when price reversed lower. All right, so that's NASDAQ. Any questions about the indexes? So for both, double bottom, took a lot of patience. Nice entry right around 10:15 for both. Got you about, if you traded the low to the high, about 100 points in ES. And it looks like almost 400 points in NASDAQ. Again, if you were patient, waiting for the ideal setup. All right, let's take a look at some stocks. All right, I've got several stocks that I want to take a look at. First is Google. All right, let's see what options traders are doing in Google. All right, so we know in the S&P 500, NASDAQ, we know the pattern. So let's take a look at the patterns in the stocks now. All right, so this is a pattern that I've talked about many, many times. This is a bullish opening drive. Traders buy calls, market and sell puts. Market makers take the opposite side of the trades, and they have to buy stock to hedge their delta exposure. All right, so that's Google. Traders selling puts, buying calls, again, taking advantage of the high volatility, selling puts, also buying calls. Two key levels, Spotgamma levels, 290 to 750 hedge wall, 300 key gamma strike. Here's the pattern. Bullish opening drive up until about 11, then consolidation. Looks like traders continue to buy calls now. So this is somewhat of a consolidation / continuation. So the way the pattern works, there can be an opening drive, in this case bullish, and that can either be lead to a reversal, consolidation, or more rare is a continuation. So this is like a combination of consolidation, continuation. All right, so let's go look at Bookmap. Notice the very bearish opening print, but options traders definitely driving price. A little bit of chop. Pull back to the 295 level and also VWAP, shown by the light blue line there. Google makes a series of higher lows as traders sell puts, buy calls. There's that 300 level. Resistance, then support, then on up to 302. Note the negative cumulative volume delta. Rising price, very good indication that options traders are driving price. Well, let's take a look at one other thing. So on the subchart here, I have cumulative volume delta. That's that magenta line. Also have the market pulse price change indicator. And I use this to highlight deeper pullbacks for entry and a trend. Pullback entry. Pullback entry. Highlighted by the red extremes there. Pullback entry. So the pullback entry, A little bit late on that one. All right, that's Google. Again, using market pulse price change is a very good indication, a confirmation of a deeper pullback for a long entry. All right, let's go back to Hero. All right, Terzog asked, is the Hero purely a line chart for the price? No, it's not. I would imagine it would be difficult to find break in structure without a bar candlestick chart adjacent to your Hero chart. All right, so when I'm trading, I look at 3 charts. I'm looking at Bookmap, that's my center chart, that's my main chart. Then I'm looking at Hero on one screen, and then a candlestick chart on my trading platform on another chart. But Hero does have a candlestick version. This is the newer version of Hero. I like to use, let's go back to Google. In my presentations, I like to look at the older version of Hero. It's just a little bit easier to jump from one chart to another. And Gopal, sorry about the pronunciation, asked, is the interface different with trading platform? I use thinkorswim. The interface seems slightly different. So if you are you asking about Bookmap in thinkorswim, the version of Bookmap embedded in thinkorswim? And I'm going to assume that you are. So that version of Bookmap, all right, so Terzog, I'm going to jump back to the older version so I can quickly jump from one chart to another. But if I'm using Hero and focusing on one instrument, I'm going to switch over to the upgrade, the candlestick charts. And that is based on TradingView. So you have all the indicators and everything that's available in TradingView in the upgraded version of Hero. And that's available to all Spotgamma subscribers, Alpha subscribers. All right, so Gopal asked about the interface with trading platform. So if you're asking about the Bookmap version of thinkorswim, Bookmap version embedded in thinkorswim, it is a much older version of Bookmap. Does not have nearly as many features. I believe it's like version 7.1, and I'm using Bookmap 7.7. All right, so let's take a look at another stock. Semiconductor strong today. First, NVIDIA. A little bit of chop at the open. Put sellers come in. Starting right around 9:45. Institutional block order, selling puts. Full alert comes in. Traders continue to sell puts, buy calls. NVIDIA moves higher. Target up above is the 180. Key gamma strike hedge wall. Price continues up to that level. Looks like it is now consolidating around that level. Traded up. And then here's where the index traders took their foot off the gas. Same for NVIDIA. Just before 12:45, traders stopped buying calls, started buying puts, selling calls. Looks like some call buyers have come back in, and NVIDIA trading right at the 180 key gamma strike hedge wall. So let's take a look at Bookmap. Go to NVIDIA. All right, NVIDIA traded up to the 300 hedge wall key gamma strike. Traded up above. Now maybe finding a resistance at that level. If call buyers, that we saw the call buyers coming back in, if they continue to buy calls, next target up above is the high liquidity at 180.80 and 181. Looks like some traders are, those are limit sell orders shown by the heat map and Bookmap, and those limit sell orders do act as magnets for price, just like the 180 level did. Note, in contrast to Google, traders are buying shares in NVIDIA, shown by the green volume dots, the rising cumulative volume delta. Again, market pulse price change, marking the deeper pullbacks to help you identify entries for a long. All right, next stock, AMD. Another strong semiconductor stock today. Chop at the open. Let's see what options traders are doing in AMD. All right, I'm going to shift back to Hero Upgrade here. And the reason I want to do that is I'm going to turn off puts, and this becomes more clear. All right, so this becomes a lot more clear when I turn off puts completely, turn on calls. This is showing call buyers driving price. In AMD today, when traders buy calls, market makers sell the calls. They have to buy stock to hedge their delta exposure. Hedge wall 297. I'm looking at Google. Sorry about that. Same thing with AMD. Traders buy calls, market makers sell the calls. They have to buy stock. Call buyers take the foot off the gas right around 11:45 to 12. AMD slows down. So Terzog, you can see that. I don't know if you can see this flashing line here. This is one reason in my presentations I like to use the older version. All right, so there's AMD. Let's go take a look at Bookmap. AMD, very strong. Traders buy calls. Also aggressive buyers, shown by the green volume dots, rising cumulative volume delta. Next stock, Broadcom, another semiconductor stock. Note all liquidity up above, limit sell orders acting as magnets for price. Looks like all the limit sell orders were consumed up to 346. They could not quite make it up to 347. Let's see what options traders are doing. Go back to Hero. Oops. Turn on puts. Go back to Broadcom. All right, in the case of Broadcom, traders selling puts and buying calls. Very strong bullish opening drive. Pattern here. Long, lengthy bullish opening drive, much easier to trade. Lasted until about 12:45. And then consolidation after that. So long, easy to trade, bullish opening drive up until about 12:45. Levels up above 340, key gamma strike, 350 call wall. And again, traders could not quite make it up to 347. But if the call buyers and put sellers come in, That 350 level could be the next level in play, but Broadcom would have to slice through all these limit sell orders up above. All right, last stock I want to take a look at, Western Digital. Memory and storage stocks, strong today as well. That is Micron, it was earlier, and also SanDisk. And Western Digital, very strong, near the top of the list of my hero stocks. All right, let's see what options traders are doing in Western Digital. Buying calls. Trying to get up above the 260 key gamma strike. And it looks like the 240 hedge wall, if you were waiting on this at the open, was a good entry point for long. Then there were a couple of pullbacks as traders continue to buy calls. $240 hedge wall. Again, if you were fast waiting on this at the cash open, entry point for long pullback entries. Market pulse price change extremes marking the deep pullbacks for long entry. And now consolidation. Looks like the traders continue to buy calls with that 260 key gamma strike up above. So call buyers not quite as aggressive as they were in the morning, but still buying calls. And the 260 liquidity just above. Sorry, I should have turned off the yellow lines. Would make it that chart a little less busy. All right, back to the indexes. All right, so it looks like ES found support at that combo level. That it acted as support before. And that's also right at the 6,700 level, ES 6,700. Right back to Hero. S&P 500. All right, the call buyers and put sellers came in. So they took a break for about an hour from 12:45 to 1:45. Put sellers came in. Looks like around 120. Call buyers joined. Price moves higher. S&P 500 equities starting to move higher. NASDAQ call buyers, put sellers. Mag 7, same thing. All right, any questions? All right, let's take a look at a couple of other instruments in play. First of all, this is the USO, the ETF that tracks crude oil. Made a peak right here, right around 10:08. That was the second lower call peak pattern. So traders started selling calls. Put sellers took the foot off the gas, started buying a few puts. And you also found support right at the 110 key gamma strike. Crude oil has been very volatile. So today, equities moving higher, volatility, VIX dropping crude oil dropping. A couple of other stocks. Vertiv Holdings. News came out on Friday that it will be included in the S&P 500. Traders buying calls and buying puts. A little bit of a choppy day. Net overall, Hero Signal, almost flat for the day. All right, last stock, HIMS. I think HIMS was up. Let me check on something. Oh, HIMS net for the day is up 40% after reaching an agreement with Novo Nordisk. All right, that's HIMS, total S&P 500. And Terzog says the Hero Trading View looks good for me. I use Trading View a lot, but didn't see the call wall, put wall, key gamma, etc. Or could just add them as an indicator. All right, let's go back to the upgrade version here. We're on AMD. Let's take a look. Let's see a stock that had some levels in play. Let's go to Broadcom. Also, all the key levels are shown. There's the key gamma strike for Broadcom. All right, so they are shown. The key levels are shown with either level. And then the upper and lower daily expected moves and weekly moves, that is something that I add manually, and I do that in Thinkorswim. If you want to add those in Trading View here, I think you could probably do that. I show those in Thinkorswim. Now, the S&P 500 does have the implied one-day move and low. And that is Spotgamma's implied move based on the opening price for the S&P 500 SPX. And it's also shown on the S&P equities chart. All right, everyone, let's wrap it up. I want to thank you very, very much for watching. Thank you very much for your questions and comments. Really appreciate it when you ask questions. And everyone, have a great afternoon. Again, thanks for watching, and I will see you on Wednesday. Remember, U.S. has switched over to daylight saving time now, so I'll be streaming at 1:30 p.m. Eastern Daylight Time on Wednesday. Thanks again. Bye.